maybe it'll be better this time.
Or maybe it'll still be awkward. This is Alec and Elizabeth with Awkward Conversation State.
Yeah. So,
Incredible.
Alec, I found out Natasha's like the OG of FinCEN.
Good. How did you get roped into that?
I was tricked.
We owe her big time.
So,
So did you come up with it that was like, is this your thing? Or were you like the first person that they called when it was ready to start going? So this is not
No.
your fault, is it?
It's not. No, I'm just, I like presenting on, topics where I can say, I'm just the middle person. This is required by the government and I'm here to give you information and not, I'm not requiring you. Our TRG is not requiring you to do anything. This is the government that's requiring you. So I actually enjoy those type of topics because I can kind of stay neutral.
Blame somebody else. I mean, that's how
Yes.
it feels when we do signings, right? Is these are not my documents. Somebody told me to tell you to sign them.
Right.
and then Samantha, what's your role?
Yeah, I am Samantha Keller, VP of Escrow Operations here at Title One. So I oversee all the good stuff, policy, process, procedure for Title One in Idaho, Washington, Montana, and Oregon.
Okay. And then Natasha, what's your title? We just talked about you being the OG, but not necessarily like who you are.
Yes, so I am VP Education and Underwriting Counsel with Title Resources Group based out of Charlotte metropolitan area, North Carolina. And I've been in the title industry for 18 years. And I love education, love helping people to understand what could be considered challenging, hard topics. And I enjoy title insurance, if that there is such a thing.
Alec, do you enjoy title? Alec is in title also here in Idaho. So do you enjoy title insurance?
I must enjoy it enough. It's over 22 years that I've started in it. So I think it just either ropes you in, doesn't spit you out, or you enjoy it so much that, yeah, it's great. It's a lot of fun.
And I think I'm your typical real estate agent that knows we have to have title insurance, but actually I don't know anything about it. I hit the extended policy on the contract and the normal mortgage policy, but I can't explain why they have to do those things other than they're required by somebody. So
Actually, title insurance is optional.
is it if you have a mortgage?
No, but it's optional, and that's how it has to be shown on TRID. So,
But if you get a mortgage, it's not optional.
I mean, the lender's going to require it. So at that point, it removes the optional, but it still has to be shown as optional.
So,
And so I guess I would say the owner's policy is still optional. It's the lender's policy that's required. But why not, especially if you're in a simultaneous issue rate state, why not get an owner's policy as well?
and then there's an extended policy, which a lot of agents don't add. The extended policy is beyond. I never really quite understand what that means. Is it beyond the scope of the policy or beyond the scope of the walls of the property? I've heard both.
I would
Natasha,
like to take that one because we don't really use extended policy on my side of the country, or at least North Carolina.
Is there someone that
It's all circumstantial based on which property is, but if you're electing to get the Alta homeowners policy of title insurance, if it's a single family residence or 1 to 4, however it works, is it will cover for a lot of items that are not of record at the time that it closes. So the standard policy will cover anything once the transaction closes, anything from that point back that's been of record with the county. Anything that comes up afterwards there is limitations to it, but there's also things that the claims department would be able to cover if claims arise after closing. So you can think of it this way: if it only costs $170 for the buyer to get the additional coverage, why not do it?
So what is FinCEN and what role does it play in real estate? Because I know it's this new word, and we teach a law, kind of an update class. You in North Carolina, I know you call it like an update class, but we call it core here, and it's kind of an other relevant legislation, but it's not really focused or highlighted this year. And so I think even as an instructor, those classes, I'm like, I'm learning a little bit about it, but I don't really know exactly what it does. So kind of give us the 30,000 foot view of what it is, and then we'll dive into it.
Okay. So FinCEN is short for Financial Crimes Enforcement Network. And it is a part or under the Bank Secrecy Act. And what it does basically is their goal is to prevent or counter money laundering and illicit, transactions. And so that's kind of the 30,000-foot view of what FinCEN is. The new rule is a part of, really, it comes under, again, the Bank Secrecy Act and the Corporate Transparency Act, which I know we'll talk a little bit more about that. But FinCEN is a governmental entity, federal government, and they are given authority through again the Bank Secrecy Act to implement and administer and enforce compliance with the Bank Secrecy Act.
Okay, that sounds like a little bit like Al Capone-ish, Bank Secrecy Act.
Yes, I agree. I agree.
So if I have a cash buyer, what's that going to look like? I know that's not really one of the questions I gave you, but as a real estate agent, if I have a cash buyer, what things do I need to pay attention to?
Okay. So first of all, if it's an individual cash buyer, nothing has changed. And hopefully what that means is the majority of the closings or transactions that you handle won't change at all. Now, that being said, if the buyer is an entity that's covered under the rule or a trust that's covered or that's reportable, then that will change as far as your buyer is concerned. And from your perspective as the real estate agent, it's not going to change much. It's really as it relates to, the settlement agent and the reporting that will need to occur, because again, the goal for FinCEN is to prevent anti-money laundering. And so there are a subset of residential real estate transactions that are not covered in other areas or by other areas of the rule. And so with that being said, those entities or trusts, what's going to change is additional information will be required to get the closing completely through the finish line. And some of that information may be collected on the front end and probably will be after the contract is signed. And some of it will be collected, during the 30 or 60 days or however many days it is between the day that the contract is signed and the actual closing transaction. But it does need to be collected prior to closing. And again, I won't get ahead of myself, but we can talk about what that information is that will need to be collected.
Okay. So why is it something that they monitor so closely?
Well, because you think about real estate transactions, and again, you said Al Capone-ish. It's like basically what they're looking at is following the money. And when you think about real estate transactions, you could have people, and again, we're talking about a certain subset of residential real estate transactions, but there's the component where the seller, they could illicit actors can take money from maybe drug trafficking, purchase property, residential real property, and then sell that property at a higher price. And basically, it looks like the gains came from the real estate transaction itself and not from the drug trafficking that may have occurred prior to that. Or what could happen is they can purchase property using drug trafficking money, and then when they take that and they keep the property in the illicit buyer's name, and then they rent it out to a shell company. So it's basically what FinCEN is trying to do is uncover what may have been hidden in the past.
So I was sort of under the impression that maybe it was trying to prevent foreign entities from buying as well. Trafficking and money laundering, I did understand that, but I've heard a few comments, and so it's just me picking nuggets off the floor that may not need to be picked up, that it might be preventing, like China or other countries from buying in the U.S. Do you think that's part of it, or am I just totally having my own little conspiracy moment over here in Idaho?
I mean, it certainly could be a part of it, especially when you think about the Corporate Transparency Act and the beneficial ownership interest, and how it basically was dwindled down to only foreign entities have to report, the beneficial ownership. And so it certainly, that could be a part of it. But again, 30,000-foot view, it's more about, preventing anti-money laundering.
And so does that include legal drug, in all around Idaho, you can buy marijuana legally? Idaho is its own little we're in our own little bubble over here and we don't allow that. But would it prevent somebody from having money in Oregon or Washington from growing it legally and coming to Idaho and buying it? Would that be something they would look at? I don't know whether that happens or not. Sorry, I'm kind of off the rails here.
Yeah. It's hard for me to answer that question, but that's not an illegal activity. If it's legal, then I would say that's not the purpose of the rule or the goal of the rule. Now, could one of those transactions kind of get caught up in it? It's, again, really it's the reporting. So FinCEN is looking at who is being reported, i.e. the LLC, the entity or the trust, and the beneficial owners. So that's what they're looking at, and whether or not, again, one of those owners that could own a legal drug, producing type company, then, again, that's not really what the rule is for.
Okay. And you keep mentioning, so I have a buyer right now, just one single lady. She's paying cash. So that person would probably not fall under these rules. But if she had some kind of trust, it might. Is that what I'm hearing?
It might. So what you're hearing is if she purchases the property in her individual name, that is not covered. That's not a reportable transaction under the rule. If she purchases the property in her trust, it still most likely won't be it depends. So there are some exemptions, which again, we can talk about that as well. But there are some exemptions related to trusts, but it's possible that it could be reported.
So for a real estate agent, if they hear that they have a client who is buying the house with a trust and they're paying cash, they should maybe not schedule a 5-day close.
Correct. They should definitely contact the settlement agent as soon as possible. But again, I mean, depending on the circumstances, most likely that's going to be that's going to fall under the exemption. What I would say, and you asked a question related to this, and that you sent, but I would say the thing that you want to think about is, as a realtor, if you have an entity or a trust that's purchasing property, you want to make sure that you put them in front of the settlement agent, i.e. the reporting person, as soon as possible. Put that information so that they can then determine whether or not it's a reportable transaction or not, and not have the realtors try to determine that and potentially get it wrong.
Okay, so it sounds like if I had somebody that was going to use a trust as a cash buyer, that I would contact Alec or someone at Title One, and ask them, can you vet these people so I know what kind of timeline I can put on my contract? Because cash is often used as a quick close, as an incentive to get a little bit lower price sometimes, or be picked, versus a contract that has to go the 30 or 45 days. So if you have an entity, it would be almost like a pre-approval you would bud it with the title company. Is that
would be the first thing I would do, yes.
And I think you as an agent, Elizabeth, it's really more about you understanding, the caveats to FinCEN. And so when your customers are coming to you to make those offers, then you're able to say, you are purchasing with a trust, you are purchasing, in an LLC, you're buying with cash. Please just know we need to have some additional conversations with the escrow holder to see if they are going to require additional information and documentation from you in regards to this new reporting requirement.
okay?
This is definitely not my way of skirting anything, but what if somebody wanted to purchase as an individual and then they quit claimed it into their entity after closing? What does that look like for them? Is there anything that they would need to do then if they just walked into the county recorder and recorded a deed?
So, Alec, are you saying that the person who purchased the property individually, who's preparing that deed for them to then transfer the property over to their LLC? Are they preparing it themselves?
They're going to have to, because title can't do it because it's outside of a transaction, right?
Okay.
So if they're preparing that, they go to Staples and get a deed or create it their own way and do that. Do you foresee that being a way to get around this for all these transactions, or is it still going to be something they're going to have to worry about moving forward?
I do think this is a way to get around what the rule is trying to implement. And I say that specifically because there is one transaction that's not reportable. One example, rather, of a transaction that's not reportable is a transfer for which there is no reporting person. So in that case, again, if I were that individual and I prepared my own deed where I transfer the property from myself to an LLC, then there's no reportable person to report that transaction. And so in that case, it would most likely, I would say, based on everything I have read, fall under that exemption. And so to answer your question, yes, I would agree that would be a way around the reporting that FinCEN requires.
It's you, Al Capone. Maybe that AC stands for Al Capone.
Not trying to break the rules, but I know that people are going to think about that because it
Just
does
showing
happen.
us
I
the
know.
way to
And
do
I
it.
was like, oh, wait, but this is going to be on YouTube. This is going to be on all. So you're getting me involved in the skirting around.
Oh, yeah. Make sure you put the whole thing and not just clips of this on there.
Where's the disclaimer?
Yes, I need that.
We are not encouraging any kind of illicit behavior in this podcast. But there are ways
Absolutely.
to figure it out. So, what are geographic targeting orders? I saw this and I was like, I don't even know what that means. Like, that sounds like I'm gonna bomb something.
It's our Idaho
No,
bubble.
Yeah.
Is that
I was
local?
going to say. Samantha, you said she was in a bubble?
It's our Idaho bubble. We're really lucky because we don't have to deal with GTOs in our area. So FinCEN is like huge news for us, right? Because we're not familiar with any of this reporting.
Okay.
Oh,
Well, actually,
yeah.
interestingly enough, I mean, there are no GTO, territories in North Carolina either. So I'm similar. But the geographic targeting orders were issued in 2016, and they require reporting on a subset of transfers of residential real estate that FinCEN believes present a high risk of money laundering. And so what you're looking at is what we're going to be doing, although there'll be some additional information that needs to be reported. We're talking about major metropolitan areas like New York, California, Florida, just to name a few, that are already doing some of this reporting. Again, not as much as what we're going to be doing with the new rule when it becomes effective, but what this means, though, is that FinCEN, like, they already have the database, although they haven't completely shared the report that will be done under the new rule. So what you can think about the new rule as basically an expansion of what GTO already does in certain metropolitan areas. The other thing about the GTOs is that it only covered, again, a subset of residential properties where the threshold rather of the purchase price was $300,000, and except in like Baltimore, which the threshold was like $50,000. And so FinCEN, the new FinCEN rule, is essentially going to replace the GTOs.
Okay, and that was supposed to start right about now, but it's been moved to March. Is that correct?
Correct, yes.
So it's the end of March, if I remember right.
No, it's March 1st as of right
Oh,
now. I
okay.
have heard that they're talking about extending it, but that has not been confirmed yet. And while we're sort of on this topic about the date, I know that many people, and maybe not in Idaho because, this is kind of new to you, but many people are thinking, oh, this is not going to go through, or it's going to be like the Corporate Transparency Act or the beneficial ownership interest, like it's only going to be for a certain set of, even a smaller subset of residential real estate purchase transactions. And I'm sure that most people have also heard about the Fidelity lawsuit that they filed back in May of 2025. I wanted to say that on December 9th, there was a magistrate judge basically wrote up a report and recommendation, and what they're recommending is that Fidelity's summary judgment be denied and FinCEN's summary judgment be accepted, and for the court basically to dismiss the lawsuit. That is the recommendation. An order has not been entered yet, and the parties have 14 days to file any objections. None have been filed as of today, but that could certainly still happen. They still have time. And I only wanted to put that out there because, again, there are people who are thinking this is surely not going to move forward. But at this moment, it looks like it will.
Okay. You already talked about what would trigger it, or the average home buyer this isn't going to affect them. This is more if you have an LLC or a trust involved with your transaction. Is that correct?
Correct. And again, what we're talking about is residential real property. So we're talking about 1 to 4 family property. Also, consider vacant land on which the buyer intends to build a 1 to 4 family structure. Because, if you have a transaction where it's just vacant land, you can't say, well, there's no home on it. But if the buyer intends to build a residential real estate a family structure, a 1 to 4 family structure, it must be reported. A condo or co-op or apartment buildings and mixed use. So those are the types of residential transactions or residential real property that must be reported.
Okay. And it is fair to say, I was just teaching yesterday, and we were looking at cash transactions over time. And in the 80s, it was like 10% of all transactions nationwide were cash. And now it's in 25 to 30%. So there has been a significant increase. We hear during COVID, we would hear all the transactions are cash, but it really was still only a quarter to a third of the transactions. But that's still a lot more than 10%.
Yes, I agree. It's a lot more. The thing that you want to think about, though, is that, okay, you take that 25% or the percentage that you just gave, and then you say, okay, well, how many of those transactions involve a buyer that's an entity or or a trust?
Yeah.
And so that subset is even going to be smaller. And I was talking to one of our national agents, and they said that they looked at their transactions over the last 3 years, and it came up to 9% that actually would have fallen under this rule had it been enacted prior to this year. So 9% is not, it's around that 10% mark that you just mentioned.
Yeah.
For transactions. But again, take all, the cash transactions, and you think about the exemptions, and you think about the fact that it's only for entities and trusts. So it is going to be a smaller subset of those cash transactions that you just mentioned.
But I think my assumption, and maybe it's incorrect, is that more people are having trusts and LLCs now than before. I think people are getting more savvy. Do you see more, Alec and Samantha, here in Idaho? People with
mostly people that are moving here, where a trust is really a little bit more beneficial in another state, whereas here in Idaho, of course, with the community property, it's not as needed. But of course, I'm not a financial advisor or attorney. But we are seeing more because people think they're needing to use those and put their properties into those a little bit more frequently.
personal information is collected. Oh, go ahead, Samantha. I see it's awkward. We interrupt each other.
I was just going to say, I think, we're going to see this a lot with like all of the building happening here in Idaho, where, a lot of the builders, purchase in their land banks, and then they go from the land bank to their buyer. It's going to be a lot of those transactions with the builders and their entities where, their intent is that they're purchasing a lot, and it will be a single family residence that is built on that are going to be reportable. And that's really what added to, our data when we figured our percentages very close to that 9% Natasha mentioned, of transactions that we're going to have to report. It was those, repeat customers, repeat builders, that do regular business.
And it's
so with those, would they have to, it have to be reported on each transaction, but how often are they resubmitting information or will be resubmitting information for each file? So if they close 30 a year, are they going to be reported 30 times, but are they going to have to resubmit information, or can that be pulled from one file to another?
Yeah, some of it's going to be able to be carried over, but a lot of it is going to also be property information or financial transactional information that's specific to that individual transfer transaction. And so each set of data in that report is going to be different in each of those 30 reports that's filed.
And one thing some are newer agents may not understand, or the public, is that a builder will often register with 1 or 2 title companies for this reason, so that all of their financial information is at a title company and they don't have to do as much work, and they're able to make the transaction go smoother. So this sounds like it's even more important for those builders to have that relationship with the title one or two title companies. Is that correct?
Yes, very correct. And I think your next question that you were going to ask about the information that's going to be collected is a great, next step into, hey, here's what we need to collect from you and what's going to be important.
And what is that information that you collect?
So it's the information on the transferee, which is the buyer, and the seller as well. So that's one thing I want to make sure that people understand, that it's not just the information from the buyer, but what you're looking at is the beneficial ownership interest, their information. So you're talking about name, tax ID number, social security number, and there may be layers of reports. And so if we're dealing with an LLC and you have an entity or multiple entities that own that LLC, and that LLC is at least those owners rather are at least a 25% beneficial owner of the transferee. And then the other thing is if they have substantial control over the entity, so their information as well. So you're talking about names, and I'm sorry, there's the ALTA. I don't know if you've seen the ALTA information form, but it goes through specifically all the information that must be reported. But the thing to keep in mind again is just the layers of information that may need to be reported depending on if you're dealing with an entity or an LLC, and you're talking about definitely some private information from the individuals or the entities where you're collecting that information.
Okay. It says agents are sometimes the first to hear about the concerns from buyers, because buyers, if they're cash, they may have already done some research. We know that clients are using ChatGPT or other AI programs and Google to help them research how to buy a house, how to sell a house, what agents use. But they also may be doing that with ChatGPT to ask, or other AI programs, about what is the best way to do a cash transaction, or it may come up in a cash. So when I'm an agent that doesn't know anything, because I don't pay attention to anything but what's in front of me, what kinds of things how can we learn how to explain it, I guess? Or
That's a really good question.
Right.
And I think, Samantha, I'm sorry, were you about to say something, Samantha? Oh, okay. Sorry. That's a really great question. I think as a realtor, there are some people who you're not going to be able to, help calm down when they see like this additional information is required. And so I think the best thing that you can say is that this is required by the government. You could talk about FinCEN, financial crimes network, and that the additional information that will need to be collected at closing, the settlement agent can share more about what that information looks like, because again, you're going to be talking about information forms that will need to be sent out, or at least a questionnaire, so that the settlement agent can obtain the information that they need to report. And so it's, it may be, some people may consider it overreaching, but the reality is that this is a new law that the government has passed, again, assuming we move forward. And this is a requirement that the settlement agent must report this information in order to close the transaction. Because one of the things that I wanted to point out is that the settlement agent will not be able to file an incomplete report. So if they don't obtain the information, they can't effectively get this closing all the way across the finish line based on the requirements that they now have with the government. And there are compliance requirements for settlement agents. So I think the most basic thing that you could say to owners is this is a new rule that's been implemented by the government to prevent anti-money laundering. Most people have no worries, no issues with this, but that is what it's for, and it is required that the settlement agent collect additional information from certain buyers, and entities and trusts all mostly fall under that. And so we want to make sure that we get them the information as soon as possible, so again, they can effectively close the transaction and get it all the way across the finish line and do the reporting that they need and to meet their obligation with the government.
Okay. And it wouldn't matter what title company they used, or occasionally like a reload company will have somebody out of state. They're all going to have the same requirements and the same forms that they fill out. All of it is very standardized. Is that true?
Correct.
And so sometimes with appraisals, we have requirements in California that we don't have here. And so sometimes there's exceptions. It doesn't matter. That's not something and I'll use appraisals because FHA requirements in California require you have the water heater tied down because of earthquakes. We're in Idaho, that's not a requirement, so we won't have a water heater tied down. And we're like, but we're in Idaho, that doesn't apply to us. And so we can get that exemption sometimes removed from the appraisal requirements. There's not any of that, like we talked about Idaho being in a bubble, that doesn't matter here.
Correct. No, this new rule is for the 50 United States and United States territories. And the only exemptions are the exemptions that would apply across the board. So if an exemption applies in Idaho, it also applies in California. So there are exemptions, but again, it won't vary from state to state.
And the exemptions are buying it as a person and not an entity, or are there other exemptions?
So there are other exemptions. The one, that I talked about first was buying it as an individual, but also there are exemptions. There are certain estate planning entities that are accepted or exempted, like securities reporting issuer or a trustee that is a securities reporting issuer, not like an individual's trust, or statutory trust. That is an exemption. And as far as entities are concerned, another exemption is where highly regulated entities are exempted from this. And that's because they're highly regulated, you're not going to find really illicit people trying to, illicit buyers basically trying to purchase from those entities, or those buyers are not, don't fall into this category. And then there are other exemptions that are more related to, that are basically transactions that are exempt from the rule. And those are transactions resulting from death, divorce, or due to bankruptcy or bankruptcy estate. 1031 exchanges. I'm not a 1031 exchange expert, so I just want to make sure I put that disclaimer out there. But the property going into a 1031 exchange is usually is exempt. But the thing that I want people to remember is that property coming out of a 1031 exchange where the buyer is an entity or a trust, that is not exempt under the rule, or it could be a reportable transaction as long as it's otherwise reportable. Transfers supervised by a court of the United States, those are also exempt. And I mentioned earlier transfers for which there are no reporting persons. And the one last thing I want to mention, and because I wanted to make sure I don't confuse people, so a transfer for no consideration made by an individual alone or with their spouse to a trust, which that individual and their spouse or both are the settler or the grantor, those are not reportable. But a transfer that's going into a trust where the trustee is husband and or wife, like from third party seller, those are actually reportable. So that's why I said make sure that you reach out to the settlement agent before you make a determination or a statement to a buyer that they are covered or not covered by the rule.
So once in a while, we'll have a transaction that fails and then we go into another transaction. And so we've started escrow or with one. So I might have started it at Title One or Stewart Title or wherever, and then it fails. Would it be beneficial then for the title company to remain the same for the second transaction that they're picking up because we've started the paperwork? Or would they be able to transfer, if it's not does that make sense? Like sometimes we move from title company to title company because the seller prefers one or it's a builder or something. But if you've got a buyer that started this process at one title company and now we've fallen out of contract and we're going into a different transaction and their listing agent is insistent on using a different title company, how easy, I don't want to make it difficult as a customer service piece for the buyer to have to go back and redo all of that stuff. How important would it be to stay at the same title company, or how easy is it from one to the other?
Okay, first I want to make sure I understand your question. You're saying that you had a buyer that was going to purchase property, that transaction failed, and so now you have same property but different buyer, and that buyer, so same
buyer, different property.
Okay. Same buyer, different property. Okay, it really depends on how far in the transaction you were before it failed, or you had to cancel or terminate the transaction. Because if you were like close to closing, I would imagine by then the settlement agent has collected information on the buyer. And so that information would already be there that's required to report to FinCEN if it's a reportable transaction. And so I would say it would be beneficial to stay with the same, the same title company, such that because they already will have that information. If it was something that where, the file was just recently opened and they hadn't gotten to the point where the settlement agent started collecting the information, then it really won't matter whether they stay at the same title company, or move to a different title company. Now, the part of your question that you asked, that I highly doubt a settlement agent would be willing to do this, but I'm just going to put it out there. So you sort of mentioned, if the Title One, say for example, or the agent that you open the file with, and then someone in the transaction really wants it to move to this title, a different title company, would the first title agent be willing to provide or give the information that they've already collected to another title agent? First of all, they would have no obligation to do that. Second, I don't know why they would. It just wouldn't make sense for a settlement agent to do that. And I would probably caution against it, because the information, and I would think that most likely the new reporting person will want to verify and confirm they have the accurate information by collecting it directly from the buyer themselves. Again, I'm in underwriting, so I'm not on that side of it, but I just don't think there would be an advantage of doing that. But so it would be better to keep it with the same agent if possible.
And so I could, as one type of agent, go, well, I like this title company and I like this escrow officer, so I'm going to start my buyer at this title company with this escrow officer, and then insist that we use them no matter what property we close. Could I do that? Like, sometimes you'll see that people are like, oh, we've opened escrow with this seller at this title company. Could it now come from the opposite side, where they say, I've already started the process at this title company, we want to stay here?
I'm not sure I'm the right person to answer that question.
Okay, that's fair.
Because that is more of a question for, it's more of I think a customer service question rather than related to FinCEN.
Okay.
I don't know if you have anything to add to that, Samantha.
Yeah, I would just say what you're going to see, probably, Elizabeth, that's important to consider in these conversations is that while the reports and the information that is going to be collected is the same, that the way that each escrow company does it is most likely going to be different, because they've got options. Essentially, we might use a third-party vendor to help us keep this information secure and collect it electronically, whereas another title company may choose to do it all in-house, and report it manually from like their accounting department or something. So I think that's where you're going to see some of those differences as well. That's going to make it hard, one, to share the information, as was asked, but also to know what's easiest for the customers, right? Because especially if they did it on a platform, it was super easy, it's saved in there, they felt like it was seamless, it probably is going to be harder to ask them to go elsewhere if they're going to have to like fill out a paper form, and the escrow company is going to be calling and asking them 100 information questions. So I think you're going to see some differences there, and that's going to be key probably into having those conversations and making the decisions on who you want to handle those transactions and who you're comfortable with.
Okay. So is there a question an agent should ask a title company?
You can just ask how they're handling FinCEN and get some answers from them in regards to that, and they should be able to let you know more of their in-house process.
Okay. Are there red flags that would suggest that the client or the transaction or something may be problematic with this resort?
Well, one thing that people have mentioned is, if you have parties that are refusing to give the information that's required under FinCEN, it might not be a red flag and it might be a red flag. And so, because, you have the suspicious activity reporting that's done under certain, financial institutions. And so that could be considered suspicious activity if they just refuse to provide the information that's required. Again, everyone has their own belief system. They don't want to be on the grid. They don't want to, provide their personal information and who's really collecting who's storing it. So there may be legitimate reasons why someone would not want to provide that information. But I would say also the flip side is that could be a red flag as well.
Okay, that they're trying to hide something.
Yes.
We get a few conspiracy people in Idaho, so we may have
You're
some of
one of
those
them.
people that are, huh? What, Alex?
You're one of them from earlier.
Well, you were trying to break the law, so it's, I think that they're trying to take my money and you're trying to like figure a way around it.
Yeah,
Yes.
I wasn't the one that said bomb on an airplane, though. So
That's good. Don't say bomb on an airplane.
Please don't.
And is there anything else that we missed? I feel like I've been looking through the questions. We've gotten most of this.
I think, Elizabeth, the one item that really hasn't come up yet that I think is very important in our Idaho transactions that we do see often is the other part of the reporting requirement is not only if it's cash, but if it's non-financed. And essentially with the non-financed transfer, that is an extension of credit to the transferees that is not secured with your standard traditional bank. So when we see seller financing or, private lenders getting involved in transactions, that is going to be considered a non-financed transfer, which then again, if it's a trust or entity purchasing, makes it reportable then under the new FinCEN requirements, which is again, something we're going to run into often here in Idaho.
Okay. Yeah, I was like, you mean trading my Chevy for a truck, but I mean for a house, but you mean like someone seller financing, like owner financed transaction?
Correct.
And then you said something else. So owner financing and
private financing.
Okay, so like a non-government regulated lender.
Correct. If the lender doesn't have an NMLS number and their own anti-money laundering programs in place at those banks that they do, then we're going to be required to report it.
And sometimes we use both of those when somebody has a bad credit or difficult money to put down, or they have a lot of money to put down, but they're not able to get financing because of whatever reasons.
Correct.
Okay. That's interesting that we'd have to do it because that would count as a cash transaction if it was a owner financed, because I wouldn't think of those as cash transactions.
Yeah, so it's cash and non-financed is really the bucket.
Because that could be money laundering, like here, you buy the house for me and I'll finance it and then we move the money through. That's Al Capone again, Alec. And you didn't come up with that one. I'm surprised.
I just realized I've been sitting so still, my light turned off.
Oh.
One thing I will say, Elizabeth, as well, is that we didn't specifically say this, but the one thing that realtors, real estate agents should keep in mind is that they are not on the reporting cascade. So they will not, ever need to worry about reporting. There is a cascade of like several companies, companies really, that are on the cascade, like obviously title insurance companies. They're number 4 that issues the owner's policy, and settlement agent, the person who prepares the deed. But one thing I will say is that, again, the realtors or real estate agents are not required to do any of the reporting. So I think for me, what I think about as far as an agent is concerned, that's working with their customers, is obviously knowing that this is a change that's coming, such that you can talk to your customers, your clients about it. And the other thing that I say to settlement agents and those who will do the reporting is, one thing you need to keep in mind is that even though the effective date is March 1st, that is for transactions that close after March 1st. So March 1st is on a Sunday, so really March 2nd and later. And the reason why I like to point that out is because it's you're really going to you're going to need to look at transactions that open, if not already open, but open like end of January, beginning of February, because those transactions most likely won't close until after March 1st. And so those are the transactions that you should be talking to your clients that about, or suggesting or telling them that there might be some additional information that's needed from the settlement agent, and again getting them in contact with the settlement agent. One other question that you included in your in your questionnaire is, what should realtors, I think it said, not say, not to get into any trouble. I think the best thing to do is certainly have knowledge about the new rule and what it does and what needs to happen. But the best thing to do is to make sure that the customer or your client is connected with a settlement agent, so that you don't say anything, or the realtor or real estate agent doesn't say anything that is not completely accurate as far as the rule is concerned. I think it's like, sort of like Alex said earlier. I mean, this is the realtor's opportunity to know and understand, to, maybe brief their client on what's coming up, but also to be able to pass the buck so that you get them to the right place. That's, I think, the one thing that's really important here is getting them to the right place so that they can get the accurate information as far as what's required for the rule.
Okay, I want to follow up with something, because there'll probably be people watching this that today it's in December and they have a build job that'll close in April or May, and they may have a financed buyer, right? A buyer who's using a lender with all the things that they need. But the builder itself will have to go through this process. May have to go through this process as the seller?
No, this rule all hinges on the buyer, who the buyer is.
So it doesn't matter if it's a builder, because Samantha, didn't you mention something like the builder might have bought land in a land trust? One of you did.
I did, yeah. And it was more like the builders are going to be those repeat customers, but on the buying side is where they're triggered. So the buyer's always the trigger. And unfortunately for some sellers, they're not going to like that part either, right? Because, oh my gosh, I just accepted an offer from a, cash buyer, which was a trust, and now I have to give all of my personal information. So it's always, like Natasha said, hinging on the buyer. But with those builders, they're going to do it on repeat because of all the lots that they are purchasing in an entity.
So if I have a buyer that's bought a lot and they're building on it and it closes in April and they're doing traditional financing, they are fine. But if I have a cash buyer that, for whatever reason, that's in a trust, an LLC, or an entity, not an individual, then they may trigger it. We may need to do some prep work because they're closing after March 1st. They're closing in April or something.
Yes.
Correct.
Okay. Did I miss any other questions? Alec, did it trigger anything for you other than like how to get around it?
Yeah, I think we're going to have a busy February if March 2nd is the date that this starts. So let's get everything closed.
Oh, yeah. That's
Get everything closed before March 1st.
Yeah.
That's an
No, I mean,
incentive for a
we've been
cash
hearing about
buyer.
it. We've
If
been
you
hearing
are
about it all year, right?
if you're a
And so
cash
this
buyer
is,
with an LLC or a trust, you might want to
yeah.
close. Buy a house today so
Yeah.
you can close.
So you can skirt the regulations. No, I think it's a very informative. I appreciate you both being on this. It's something we've heard about all year, but for me, I'm not really diving into it until we need to dive into it. But it has been really informative to hear this over this call, and I don't know if I look forward to seeing this actually come through. Um, so here we go.
Well, thank you. I wasn't as awkward as some of ours because sometimes we do talk about all kinds of things, but it was our first one we did in this format. Normally, we're all in the same room together. And so the video is a little wonky and you'll see side views of people. So this is the first one where all four of us are facing the camera. Hopefully, the sound is pretty good and this might not be as awkward as normal.
Well, it wasn't with these two guests that we had. It's usually the
No,
two of
they're
us that
much
make
more
it that way.
professional. No,
Yeah,
our other
I would
guests are
agree.
also professional. I don't want to take anything away from them, but yes.
I
Yeah,
wanted
more
to I
than
wanted
we
to be
are.
a little more I wanted to be a little more awkward, but I couldn't figure out how to put in, add in the jokes. I mean, because this topic is awkward in and of itself, but
It
maybe not the
is.
awkward funny.
It is because it feels it is awkward just to talk about because we don't know what it means, and you hear FinCEN. I do think when you use the whole what does FinCEN stand for? Because that to me is awkward because I'm going to have consumers go, "Do you think I'm a criminal?"
Yeah, yeah. Don't you? Well, now they're going to see this video, but just say FinCEN. But Financial Crimes Network.
Yeah, that's scary. Are you and you're in
I'm
North
sorry,
Carolina?
I apologize. Financial Crimes Enforcement Network. So that's
There's
what.
your awkwardness, right?
Yeah.
This is your job and you got it wrong. So
This was so fun. What other topics do you talk about if we ever wanted to have a repeat?
I can, again, all things title insurance is, I can talk about it. I've, again, been in the industry for 18 years. I've been in claims and operations. I'm currently an underwriter. And as far as education is concerned, I mean, I can talk about trusts. I can talk about one thing well, this wouldn't necessarily be a podcast topic, but I talk about claims. I talk about different things, and I don't know if those are awkward enough, but
What's the weirdest claim
uh,
you've ever had?
oh my, it's been a while since I've been since I've done any claims work. Probably about 8 years. So I'd have to think about that for a few minutes.
Okay.
Here's one thing I will say. Most title companies, the claims they hate the most are claims dealing with family members because they are the worst claims. Because people are not only, it's not just about business, it's not just about property. Usually, it's not just about the things it really should be about, but it's about feelings and emotions and things of that nature. So the claims that, again, most title companies hate the worst is claims involving family members. And they
Okay.
usually drag on and on and on because people have a point to prove, and the title company is sucked into the middle of that.
You're used to being the neutral third party, so you don't want to be part of that drama.
Yes.
And it's not even claims, it's the number of time that it's family or ex-boyfriend and girlfriend and we get pulled into litigation because they're arguing over the property. That is super fun.
Yes.
Awesome. Okay. Well, we really, really, really appreciate you coming on today. And I know it was a little bit of a process getting scheduled and the questions I didn't go in order and I asked you things that you weren't expecting. So appreciate you flowing with me. Because we started this podcast to educate real estate agents and get them a little deeper dive into topics, but also it's out on the public. So it is to help educate consumers understanding real estate. I think one of the things we do poorly as real estate professionals in general is educating the public that's buying the house, and it's the most expensive transaction most people are involved with, and we're just like, okay, sign the paper and then go sign with Alec, and hopefully everybody, here's your keys, have a great day, and we're very like cavalier about it and
Hmm.
really not diving into things that they should be worried about or paying attention to or things that they have to worry about. So thank you for helping us.
You're
Elizabeth, I just
welcome.
noticed that that's not your actual background. You put a fake background, but it looks like you set up your office that way.
I
So
know it does look nice. If
bravo.
I put my real background here, you would see that I have like a Spider-Man balloon.
Elizabeth, I had one thought. You asked for a topic, and because you mentioned that these podcasts are also for the consumer, or they may see it. One topic is, what is title insurance? And I think based on what you said earlier, it could be something that helps realtors as well, and that is something that I speak about. And I think we could do it in a podcast format. Like, how did it start? When did title insurance come into existence? Things like that, and why do we need it? We could talk about what Alex said when he was like, it's not required, it's not, it's optional, those things. And I think that would be super helpful for realtors and consumers.
I would love that. So we can get you scheduled again. So I don't know how we get you scheduled, if I just contact you directly or if I go through Samantha, but we will get you on again for that. That sounds awesome.
Okay.
Thank
Thank
you.
you. I would love to. You're
Yeah,
welcome.
I do you teach too, or do you just do what you do? Because I go to
So
teaching stuff, so I didn't know if I would see you other places.
Well, I mean, I mostly what I'm doing is online or webinars, and though I'm available whenever TRG needs me, wherever they need me, I am willing to go.
Cool. Awesome. Thank you. Enjoy your
You're
day.
welcome.
Happy
Thank
holidays,
you.
everybody. And we will make it awkward next time. More awkward. This was
Yes.
actually really normal.
See
Thanks.
y'all.
Bye.
Thank you.
Thank you. Bye bye.
Maybe it'll be better this time.
Or maybe it'll still be awkward. This is how like endless like with awkward conversations state.